If you are an altcoin investor or an altcoin holder, then you don't want to miss this video. The headline says Greenland is crashing the markets. But let me be very clear to you. Yes, while the headline says Greenland is the situation that we're currently facing, it is a short-term temporary distraction in the greater noise that the markets generate. And there's something far more important that's taking place, of course. And in this video, I'm going to talk about altcoins. Specifically, I'm going to talk about the reasons why the markets are crashing. Is it noise? Certainly. Is it designed to pull your attention away from what matters really? 100%. It's like a cascade of emotions that are hitting market from all places. But here's really where the real picture is. Ever since the Fed started to cut back rates in September, something unusual has been happening. The bonds yield market, the rates that affect your mortgage, your housing costs, your credit cards, they've all gone up and not down. Okay. Specifically, if we look at these US 30, the US 30-year government bonds, you could see that since 2020, we've been on a massive rally. Okay. And some of the reasons why liquidity or the Fed is not in control of what's happening right now can largely be to do with this particular chart. So they affect everything. And that's exactly the opposite of what should be happening when the Fed cut rates. This is a major signal, team. You need to understand. It tells you that the Fed has lost control over the bonds market. And the Fed isn't in control. Then who's in control? Someone else is, right? Fed's not in control. Somebody else is in control. And that somebody else is the US government. Okay. The federal government, this ties everything back into this massive, still growing debt problem. The government is continuing to spend aggressively. The funding, that's spending by issuing, of course, T-bills. And that's what they're doing, right? And that means more debt. Essentially, they're dumping IOUs into the market. Now, what does that mean? If you look at everywhere, when you see the bond yields rising and when you see demand for government debt falling, the dollar is selling off. Bitcoin's under pressure. Of course, Magnificent Seven are also under great threat. So I've done this piece today. And this was a very important update. If you're in the DXB VIP Discord, you may access this. But this is all, first of all, what's going on right now is designed, and it is ridiculous to pull your attention in the wrong direction. Has nothing to do with what's going on. Of course, on Sunday, I did say that this is not Venezuela. It will have a short-term market impact. But ever since the Fed started to cut rates in September 2025, we've seen unusual things happening. So first of all, same chart that I was showing you that I've put into this report, the rise of this 30-year yield. And of course, government continues to really be aggressive on this front. Okay. So if the bond market is solid, if cash is losing value, if Bitcoin's under pressure, if the Magnificent Seven tech are rolling over, where's the money going? Very simple, right? So if we look at gold, right? Gold, I did say in one of my previous reports, continues to be parabolic. At some point, there will be a catch-up trade, but nearly $5,000 for gold. It's absolutely insane. Now, if you look at silver, silver yesterday was at $94. Now, silver has more or less been in that region, 94, 96. Yesterday, it topped out. Of course, you can look at silver, you can look at palladium, and you can look at all precious metals. So there's silver for you, there's palladium, there's also platinum. Now, all of this means that, you know, materials, industrial, even small caps just printed a solid big buying opportunity. Then there's a massive signal that's happening. And what we're seeing is a textbook sell-off, guys. Massive government spending sits on top of massive debt of pile. That's what we talked about. In a way, we could have seen, we haven't seen this since World War II, right? So this is absolutely unprecedented. Since the start of 2026, inflation gauges have started to re-accelerate. That raises the risk of Fed turning more hawkish, potentially, right? So we need to be prepared. If you adjust the stock market inflation by the denominated in gold, the current levels are the same as 2020. And this is crazy, right? This is absolutely crazy. There's an illusion created by inflation coordinated by policy between federal government and Federal Reserve. So we asked the real question, is Greenland the real story? And in my opinion, when we look at, this is near protocol, right? All-time high should be 90% plus. From $20 ran to where it is today, 24-hour range of about $1.50. Same picture could be said for Virtual's protocol, 80% plus since it made its all-time highs of $5, right? If we look at Virtuals, what we see here is under $1 and of course 83 cents, but this peaked 2 years ago in, all-time high of over $5. So this is what I'm telling you right now, from the all-time high about a year ago to where we are today, 24-hour range, 83% down. And of course, from all-time lows, it has done already the numbers that you would expect in a bull market, right? Kaspa, same picture. Kaspa, I think, is 90% plus. So if we look at Kaspa is 80%. Okay. All-time high over a year ago, all-time low pretty much between April and now. Of course, 24-hour range around that 4 cents mark, and of course down from its all-time high. But look at the gains in terms of the past 3 years. So this tells me that, one, we have a buy opportunity, and not buy forced, because of course you can obviously DCA onto these projects. And we are definitely in a bear market for altcoins, right? All-time highs, majority of these have come over a year ago, and over the last 3 years, they have pulled in some ridiculous gains. So all in all, is Greenland causing the issue? I would say partially, but that is short term. One thing I wanted to show you as well is that if you look at the TGA account, right, in 2025, we've hit these levels after a massive crash. But in 2026, in late 25, we peaked around $1 trillion. This is inversely correlated to Bitcoin. This drop that we've seen here has coincided with Bitcoin going from 80K to $98,000. That's what we've seen so far. What you need to see is this coming down further in order for Bitcoin to start going up. So I'm still very hopeful. I'm still going to DCA into the markets. Fundamentals of key cryptocurrencies haven't changed. What has changed is this delusion that we are now, since the last 12 months, or in fact, since Trump came in, with being in a bull market, and it has been quite the opposite. So there's noises coming from Japan. There's other noises in the bonds market. It is all complex. But January 28th will be the next Fed meeting. And we want to see whether they hold rates or whether they cut, or potentially. So if I was to give a probability, I would say, number one, they're likely to hold the rates. So we get this holding rates, or HR. Number two, I would probably say they could hike, they could hike rates, right? They could hike. And of course, cutting is at the bottom of their priority short term. So best case scenario is the Fed holds the rate. Worst case scenario is that they they hike. And of course, the dream scenario would be the most unlikely scenario. I hope you liked the video, and I've put into perspective what these altcoins are ultimately in their bear market, and I am planning for the long term. If you want to join me in that, then smash a like to this video. I'll catch you on the next one, guys.